Good afternoon, everybody. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the updated position disclosure. I didn't do a ton of day trading today. A little bit of TQQQ, a little bit of NVIDIA. Made a couple dollars on that. I had a couple like separate trades in Palantir outside of my swing that actually also paid me a couple dollars. Tried. I see I have a typo. Oh no, I don't. I did try buying some Palantir 110 puts for this week. I closed some of that out into the close for a loss, not a huge loss, and that's it. Everything else should be the same. Let's talk about the market. Is Tesla getting hit further here? Yeah, Tesla getting hit further on news that they're planning, that Elon is planning to bid for OpenAI. Oh my gosh, the Sam Altman response. I feel like Sam Altman has just been absolutely owning Elon Musk throughout all this. That's just my take. Anyway, so the market is down 50 cents after hours, but closed positive. So even with this 50-cent pullback, up 0.6% on the day. The Qs here are also trading down like 50 cents after hours, but even with that, up 1.1%. The IWM is trading down 20 cents after hours, but with that, up 0.36%. So it was a really strong day today. It was led higher by the NASDAQ, but it was also a very boring trading session after we got through the opening kind of price action today. It really got boring. Look at these Qs. Look how boring this is. Really big gap up this morning. We digested that gap primarily through time. I called out a long, though I didn't take it myself, off of the low of the 950 bar for the Qs and the SPYs. If anyone did take that, great classic ADMA catch-up trade after a gap. That's exactly what you want to see if you're bullish on the market to get further confirmation from the small time frame. It's a great little trade there. You see the SPYs price and time correcting. ADMA catches up. The SPYs, you could have used the low of the day at that point, not necessarily the low of the 950 bar. For the Qs, the low, I think that the pivot at the 950 bar was very appropriate. I did note that the ADMA hadn't quite caught up to that yet, but it was basically a full 30-minute time correction. ADMA was just about catching up to lows. You're getting this pivot. It looks like we're set for higher price action. That's exactly what happened. Then the Qs ran into 530 resistance and did absolutely nothing for the entire rest of the day. From 11 to close, it just seemed like an incredibly boring trading session. I don't know if people are just hungover from the Super Bowl or if they're just waiting on CPI, but it was really sleepy, which kind of is what it is. That's how the market trades sometimes. So not too much going on there. We did hold the gap intraday very well today, though. But at the end of the day, when we look at our big picture technicals, it's an inside day. It's not too much has changed. I would describe today's inside day as more bullish than bearish because it gives you the opportunity to negate Friday's candle tomorrow. Friday was kind of a damning negative Maribozu bearish engulfing candlestick. Not huge, not on huge volume, not a huge day on it, but it was a failure off that 530 zone again for the QQQ to close on lows. And on top of that, when you look at the Mag 7 stocks, which we'll take a look at in a second, Friday's candle might not have done a huge amount of damage to the SPYs or the Qs. It did seem like it added further damage, though, to the Mag 7 stocks in a pretty big way. So the market overall continues to be, in my opinion, very neutral or neutral to bullish, depending on which index that you're looking at. Friday's candle, a little bit of a penalty box candle though. So if you want that neutral bullishness of this market to get more bullish, then you need to see Friday's high get negated, and then we'll actually start looking great. Because if Friday's high can get negated through like an inside and up tomorrow or something like that, then we would be breaking out in the Qs. So we'd be getting out of this neutral, rangy zone that we've been in between 510 and 530. For the SPYs, they haven't been able to clear through that 607 to 610 resistance. So if we get the inside and up, if that's able to negate Friday's candle, then you're starting to set up a breakout pretty much across the board here for the SPYs and Qs. And the IWM, a little bit weaker these last couple trading sessions for whatever reason, also gave an inside day, but it's ranging between this 226 and 230, which are important levels. So we'll see if an inside enough for the Russell can eventually lead to a break at 230. So, I would just repeat kind of what I said when I was on the podcast thing with Greta today. And if you didn't watch that, I would say go check it out. These technicals are very neutral. We need to see which way they break. So know your key levels. That 607 to 610 area on the upside is really, really important. And then a little bit more immediately, this like 595 to 590 on the downside is important. 580 is a huge level on the downside in the SPYs if it ever gets down there. Qs, it's the 530-ish zone on the upside and the 510 zone on the downside. IWM, it's 230 and 226. And then below 226, it's like 218 are the really big levels. We're waiting for clarity from this market. As time goes by, we begin to get closer and closer to a seasonally bearish period that starts typically around mid-February. I think that could increase a little bit when we get to the options X period, which will roll off some of the positive gamma on this market and make us a little bit looser. At the same time, we're just watching everybody slowly get into the pool. All of retail, the systematics are still buyers. The CTAs, it's already starting to seem like the risk is to the downside, but we know vol control is still buying and still has more to buy. But the more we get everybody in the pool, and then if we hit a period of seasonal weakness that also coincides with a period of time where this market loosens up, if you can then get the cherry on top, which is some sort of downside catalyst in that environment, I think that the market would treat that very differently than some of these smaller downside catalysts we've seen over the course of the last couple weeks. But continue to let the technicals be your guide, because I can see that scenario playing out that I really do think could lead to a 10% plus correction in this market. But if we were to break up above the resistance levels I keep mentioning and get the full-on bullishness, it almost could act in reverse. We could really break higher. We eventually could get like a spot up, vol up type of move. I do think if this market is able to break highs, it'll actually create a little bit of a further feed mechanism of buying. But the more we get everybody in the pool as we approach that seasonally bearish period that should be starting soon, the more bearish I want to become. But it's a time thing, and I think we got to get through at least this week. Then next week is a shortened holiday week because of President's Day on Monday. So we got to get through at least this week. I think that we are at a minimum like 1 to 2 weeks away from any real weakness coming into this market. And until then, it is just the nonstop bid on this market that continues to hold things up. And as we get through earnings season, you get a whole extra layer of that bid that starts to come in, which is corporate buybacks. Corporate buybacks should be buying $5 billion on average of stock per day. It's a really big number. And in their peak open window, that number becomes like $7 billion a day. It's a massive number. So it's just really hard to fight this market to the downside. But there might be an opportunity in the next couple of weeks where we could see a little bit of a mechanism of selling come in. If we break lower. So just I think the big thing right now is to be patient. Take your one-off trades, but I'm kind of in wait-and-see mode to see which way this consolidation in these indexes break and what that does insofar as a mechanism of continued buying or selling that comes in. So that is pretty much all I've got at the market index level. We can take a quick look at these Mag 7 stocks because I mentioned that we would. Apple looks really bad. This candle on the earnings day is atrocious. This consolidation here is bearish. Friday, it also had a really bearish candle like everything else in Mag 7 and the indexes. Today was also a day of real relative weakness because today was a day where the market traded well and this did not participate. Microsoft does not look good to me. See if it can get above 419. They'll start to look a bit better above 419. But this thing is sitting on support that's tested a dozen times at this point. Huge support zone between like 400 and 410. You really begin to break that, you have a problem. Meta is one of the strongest ones that's out there. And I know it's 18 green days in a row or whatever, some sort of record. But it's kind of been a grind, and I would still say that this thing didn't accelerate higher in the way it, air quotes, should have, given that earnings report. So, and it was really relatively weak today also. So I don't love Meta because I don't think it's been trading right, but it's definitely one of the best looking charts, if not the best looking chart of the Mag 7 stocks. Whereas Tesla is the worst one. And then Elon just puts his foot in his mouth again with this ridiculous OpenAI buyout that no one who's a shareholder of Tesla wants to deal with because they're like, hey, why aren't you focusing on your company that I'm a shareholder on? Why are you doing all this other nonsense? And this thing, the floor has fell out on support on this one, even though that hasn't happened in any other Mag 7 stocks yet. A lot of them are kind of testing support levels. Google might be below it a little bit. This is the one that is well below support, continues to sell, continues to be relatively weak. I wouldn't chase short here, but short on balances for Tesla, I love it. So that one looks terrible. Amazon a little bit better, also giving an inside day today. Maybe second best looking chart after Meta, but it did sell down on its earnings report as well. So see if Amazon can get above that earnings day high at some point in the next couple of days, especially if you get the inside and up in the Qs, inside up in the SPYs, inside up in Amazon, could all kind of happen together. Google not great. Not great. Below support, consolidating inside day below support. These things don't look good. A little bit of relief that I think helped give the Qs some strength from semiconductors today. NVIDIA traded really well, up through 130, into the gap. We'll see what that NVIDIA is able to do. I'm still not a real NVIDIA bull, but it's hard to be a bear when this thing's above 130. And you can see, not a Mag 7 name obviously, but Intel had a decent day. AMD had an okay day. So semiconductors were really where a lot of the strength was coming from today. This AMD chart has so much work to do. This Intel chart has so much work to do. NVIDIA still has a lot of work to do also, but is definitely an improving picture. And take a look at AVGO. Yeah, AVGO did a really nice job negating Friday's candle today. Didn't fully quite do it. Let's see if this thing can get above 235 tomorrow, but it's basically there. And as every other Mag 7 sells, they just buy Palantir with it, with the money. So this thing is just unstoppable. Like I said, I wouldn't buy it here, but the short sale on this thing has been near impossible, regardless of the extension. It's so hard to fight the squeeze that comes from the option buying in this thing. It doesn't rest. It doesn't price correct. It doesn't get back down to the 8 EMA. There's a huge spread still between the 8 and 21 EMA, but you got to be super careful shorting this momentum when Palantir seems like the only game in town to buy in big tech land right now, and they just continue to squeeze this thing up. And I continue to lose money in it, though. I'm trying to manage the position as best I can and size down appropriately at the right times, but I hate the idea of sizing down into extension because it's when you should be doing the opposite. But this thing could squeeze it really could squeeze to 125 to 150 before it eventually breaks, and it will eventually break. It's just if you're short from 57, are you going to be bankrupt by the time it's at 150? That's the question. So that pretty much covers what I got. XLE also had a notably strong day today. Really nice bounce back in XLE. Chevron, not bad today, breaking up on some levels. The VAL, I still have a nice position in. I also still like it. It's got to make this higher low and get back above 50. That's pretty much all I got. So happy to take a look at whatever questions you guys have. Tesla inside month and down from Rich N. First target would be 348-ish. Thank you, Rich. Almost there. Good call last week. Do you regret selling Alibaba? The fact that you're asking the question means that you don't understand how I trade or how I think success comes from trading. I think that success comes from trading, from following game plans. I don't regret any time I follow a game plan. And that's the bottom line, because that's how you make money in the business. You make money by having a consistent approach to the market, and a consistent approach is manifested through game plans. So one of the worst things that a trader could do would be like, oh my God, I just crushed Alibaba from $80 to $106, which is my price target, and now it's at 111. I'm so upset at myself because I didn't have a game plan to hold it to 120. That is not the right way to think. It's not the right way to approach trading. It sets you up for failure. I am super bullish still on Alibaba. I'm super bullish still on these Chinese stocks. I think that Alibaba could easily see 120, and if it goes up directly to 120 and I got out at 106, I am not going to be upset at all, despite being a bull on China, because I had a game plan. I followed my game plan. I made really good money on it, and now I'm out of the trade, and I need to wait for it to reset up, because that is how I'm able to make money trading. And that is what I suggest to everyone else. Develop an edge for yourself based on risk, reward, and probability of success. Define that edge through a rules-based approach. Implement that edge through game plans based on those rules. Follow those game plans to the letter of the law. That will create consistency for you. So that's my thought process on that. I do still have stock in YINN. I've been looking for a move to about 40 in this. I am selling on the way up, so I did take some off today. But overall, happy to still have some exposure there. I am also in Tiger, that Tate is mentioning here. I haven't been loving the way that this has been trading. This was a more recent buy for me. I forget exactly when I bought this, to be honest. At some point in the last couple weeks, looking for this breakout through this, like, kind of getting a head start, looking for the breakout through this like $750 area. Up money in it, but it's underperforming compared to those other names, which has been a little bit disappointing. It's even been underperforming compared to Futu, which I think is Tiger and Futu tend to trade hand in hand. I do think that all of these stocks have room for higher, though. This Tiger, I have a game plan where I'm keeping it a little bit tighter on the downside compared to some of my other names, but I'm still looking for a move basically to 10 in this, as I'm game planned right now, if it were to continue higher. So I do think that there's room up higher. It needs to continue to break out, and it needs to not be relatively weak compared to the other Chinese stocks. So appreciate the questions from Varun and from Tate. Much appreciated. Over on the YouTube from Giancarlo, do you see a bear flag forming in MSTR's daily chart? Yeah, I kind of mentioned MSTR briefly as one of my favorite trade ideas to the short side when I spoke to Greta today. I think MSTR looks pretty bad. I wouldn't describe it as a bear flag, though. A bear flag is a continuation pattern to the downside. You have to be trending down to form a bear flag. I guess maybe you could argue this move from 400 down to this consolidation constitutes a little bit of a bear flag. I think that's stretching it. I really think that this is just a very big picture wedge that's built out. Technically, it's a bull wedge. Technically, this is a big bull wedge that would begin to trigger to the upside above like 354 or so. So see if that wedge breaks up. But my thought process on it is bearish. Because the flip side of this bull wedge is from a failed pattern comes a fast move. And I'm looking for this pattern to fail. I'm looking for it to break lower in conjunction with weakness in IBIT. But the weakness in IBIT has to trigger first. In Pat's note this morning, let me see if I can pull up Pat's note real quick. Pat's note this morning, I don't know who wrote it, but there was a cool little research note in here somewhere on Bitcoin lower. Here. About below 93,000 BTC. would trigger 1.3 billion worth of leverage long liquidations across all crypto exchanges per CoinGlass data. I don't know CoinGlass. And then this 90,500 also looks like it's a really big important level per this research note. So I think if you break that 93,000, maybe that becomes a catalyst for a break of the 90,000, and then you get this Bitcoin to roll down, and if Bitcoin rolls down, then MSTR should get absolutely crushed. So that's what I'm looking for. We'll see when and if it happens. Because Bitcoin, to me at least, seems to trade highly correlated to markets, except just with higher beta. I would think that means if we get some of the seasonal weakness that I'm talking about for the equity market that causes an equity market breakdown, I think if that happens, Bitcoin gets destroyed. I think that it hits that trigger where the leveraged longs are underwater and you get that forced selling that happens, and whatever move happens in the equity market on the downside happens exponentially in the crypto market. That's my thought process kind of across the board right now, but you still need an actual trigger to come in for that to happen. Kevin G in the YouTube saying that Bitcoin and the TQQQ are near identical. I'm doing well, thank you. For those of us who didn't trade during the Trump volatility tweets in 2016 to 2020, like Friday, any words of idiosyncratic wisdom to share or note? I mean, this just goes back to understanding the market environment. I was listening to, I meant to mention this, a podcast this weekend with, was the Prof G podcast with Scott Galloway, but specifically it had Aswath Damodaran, if I'm pronouncing his name properly, as the guest on it, on like this last one that they posted. That guy Aswath is incredible in my opinion. I just really love his thought processes. When did that come out? They came out on Thursday last week. I just listened to it last weekend. He is like the guru of valuation, fundamental valuation, and he's a professor at NYU Stern. Definitely recommend that you check that out. I don't remember why I just brought that up. I don't know what made me think about it, but it was a really good podcast. I recommend you check it out. It just is a great way of thinking that I think that we can all learn from. But oh yeah, I remember now because of your question here. One of the things that Aswath described with this current administration, which I just thought was again just very succinctly said, is that one thing that we should all agree on basically is that Donald Trump is an agent of change. The disagreements seem to happen, and I don't want to get into politics, on people who are on the left versus people on the right versus on whether that change is needed or whether that change is in the right direction. And I'm not going to comment on that because I'm not here to comment on politics, just on markets. But one thing that we can agree on is that he is a real agent of change. Well, being an agent of change inherently creates volatility because when you change things, or when you change things from the way they've been working, you change things from expectation, that creates volatility. And some of that stuff might be good, some of it might be bad, but no matter what, it will be providing impacts to the market. And one of the things that we had seen during Trump's last administration, a lot, was how Trump could just come out with a random tweet that wasn't pre-announced, wasn't expected, but hugely, at least in the short term, moves the market and creates a lot of short-term volatility. So first thing I would say is just be mentally prepared for that to happen, because he's only been in office for a couple weeks at this point, a few weeks at this point, and we've already seen that happen several times. That's not going to stop. That's how he chooses to operate, and it will create big movements. Sometimes those movements are going to be in your favor. Sometimes those movements are going to be against the positions that you have on. It just is what it is. For me, for my thought process, I can't. It's like a risk that, hopefully 50-50 when he tweets something, sometimes it'll move in my favor and sometimes it'll move against me. It doesn't change the way I approach my game plans. It doesn't change having a stop loss in. It doesn't change where my offers are to book profit. Sometimes he'll say something that'll move positions in my favor and my take profit orders will hit and I'll be happy because I made money. Sometimes he'll say things that'll move things against my positions and I'll be unhappy because it moved them down to my stops and triggered my stops. Probably the most frustrating thing that'll happen will be for the times when he just creates volatility that moves things to my stops, triggers my stops, and then the market just continues to work in the direction that I had originally been positioned for. That could be annoying. But you can also, take advantage of volatility by, well, in a number of ways. But one of the ways in which I do it is just through, some of the cash flow trading strategies that I implement that I've spent so much time talking about. Where as long as I'm not getting stopped out, maybe I get filled on a whole bunch of bids, and then the volatility moves in the other way, and I get filled on a whole bunch of offers, and it just puts a bunch of extra money in my pocket. And so far, that's the way it's actually played out for me. So that would be just my tidbits based on trading through the first 4 years of his administration from 2016 to 2020. Appreciate the question. And the name of that podcast is the Prof G podcast for Professor Scott Galloway. I think that's what it's called. You can find it on Spotify. Prof G Markets, it's called. But specifically, I'm referencing the one from Thursday where Aswath was the guest to listen to Aswath's part on it, him speaking. He's very, very good. Yep, every test of support, higher probability of a break. For me, Vixie Bull saying maybe just fade whatever direction the market originally jumps towards when a Trump tweet explodes. No, I don't think you can do that. Because sometimes it'll work and sometimes you're going to get your face ripped off because he is tweeting something that is very significant to markets and actually will move the market in a bigger way in one direction or the other. Other times he'll say something that'll just bring a bunch of short-term volatility that comes in and fades. But you don't want to be caught when he says something that's actually very significant that creates a more permanent move to the market, which probably will also happen at some point. Hasn't really happened yet. Back to the VTF from Mike H. Do you have a preference for how a stock gets relative strength? For example, a stock gapping up 1% or going sideways and going sideways for 30 minutes versus a stock open with a quick rally and then flag after 30 minutes. I would say I have a preference for the actual intraday action compared to the percentages. So you can measure relative strength in a couple of ways. You can measure relative strength by just looking at percentages. My stock is up 1.5%, and the market's up 1%, therefore it's relatively strong. Or you can measure it based on movement, right? Like you might even see something that's relatively weak on a percentage basis, but is trading up bigger than the market's trading up. That is what I pay more attention to, but I pay attention to both. From Tate, how long does it take for market makers to find a way to hedge these tweets? Will it be soon, or year 3 or 4, or doesn't nearly matter that much? I don't think it changes anything for them, and that kind of circles back to what Vixie's bull question was on it. I don't think that there's a reliable method that you can implement off of Trump's tweets or any news for that matter when it comes in, because it always depends on how significant that news actually is. Sometimes, think about when we get a Fed day that perfectly meets expectations, and we get a whole bunch of volatility up and down and up and down and up and down, but doesn't actually go anywhere. Think about a Fed day where a significant surprise happens and we get a massive trend in one direction or the other. That's just how news works. Whether it's Trump doing a tweet or it's a Fed day or anything else, what is that news? What were expectations into that news? That's all going to determine what the reaction is, how big the reaction is, whether it's just volatility or truly directional or not. Thanks for the question, Tate. Sorry to hear that, Kevin. I was out on Friday, so I'm not even 100% sure what you're referencing. Yeah, more emphasis for me on the intraday action, Mike. All right, folks, anything else for today? Otherwise, I'm going to wrap it up. Okay. Have a great evening, everyone. I will see you all tomorrow.